All right, everyone, it's 10 a.m. Pacific, 1 p.m. Eastern. It was actually just brought to my attention as I was about to say good morning and good afternoon to our West Coast and East Coast that we do have, I believe, a few international clients overseas. I'm not sure what time it is there, but either way, thank you all for joining us today. Ian and I, we've been working together, market services specifically, myself, Nathan, your host today, since 2019, and we were talking about today and our goals, and as we continue to do these webinars with people all over the world and trying to get 500 people, trying to get 1,000 people. And this morning at breakfast, I asked myself, why are we setting the bar so low? We have found something, Ian specifically, and the strategies that he uses that works consistently year after year after year. And so it's exciting, as our groups are smaller now in the beginning. We were trying to hit the 500 mark, and we're going to be under that. But as we see this grow and evolve, it's just exciting. And to talk to actually, I think thumbing through some of our people here today, I would say probably half of you guys are already clients of ours. People that are actually already in one or two or three of these services that Ian provides to you guys. And you guys know the power. You guys know the consistency. I try to take these trades with my own money. I know the power. I know the consistency. So we're excited to have you guys. If you're new to Ian, here's what you should know. Well, first off, let me get this in front of you so everybody understands. If you need a copy of this, obviously we can email it to you. Don't trade with money you can't afford to lose. Trading obviously has risks. Most of us know that. Some don't, but we need to put this in front of you so you understand it, read it. And again, if you need a copy, we can send it to you later. Select Marketing Services, who we are, what we do. 2008, although our staff here going back into the 80s and 90s, I mean, we're talking 30, 40 years of experience, but specifically with these traders like Ian Cooper since 2008, going through their trade records, watching, monitoring, scanning every single detail you can imagine before allowing them and allowing our clients to have access to them. Career highlights for Ian Cooper, I'll let him kind of go through that in his presentation with you guys today. But if you are new to Ian, today we are going to be talking about his News Trading Alert Program, NETA, N-E-T-A, we call it, but the News Trading Alert Program. And again, Ian's going to go over all those specifics. But since 2019, we have tracked every single trade. This isn't guesswork. This is proven, documented performance. If you had started with a $10,000 account and followed along using just $1,200 per trade, you could have seen today, from 2019 to now, over $200,000 in profits. If you break that down by month, that's over $2,300 a month of income. Now, of course, this is scalable. We have clients that will trade less than $1,200 per trade. We have clients that will trade much, much more than $1,200 per trade. That's up to you. 2,400 trades, let's say. That jumps to over $4,600 of income a month that you could have seen. That's why people keep coming back. And that's why this community is growing so fast. Ian is going to break down exactly how he does it. You're going to walk away with real actionable strategies that are available to you right away. It's important that you all have a pencil, pen, paper, something to write down. You will forget what you're thinking, questions you might have, whether you put it in the chat box or write it down. And I also will skip ahead here, and I want to put this just for a minute here. Write this down here, our phone number. At any point, our staff, Ian's team, is here available for you. Our direct line, we are in Los Angeles, California, 310-647-5664. At any time, you can call us. Or on the left, you can scan that link there and make an appointment if for some reason you're short on time today. All right, without further ado, let me grab Ian now. Ian, are you there with us?
I'm here, thanks.
All right, Ian, I'm going to take this. I'm going to turn my screen off and let you take over.
Okay. Okay, let me just get this up and running. Hopefully everyone can hear and see me okay. on everybody's end. Good afternoon or good morning to those of you around the world right now. Hope this finds you well. Wanted to walk through real fast how we trade the news with 3 steps: the anticipation of news, the dissemination of news, and of course, the death of news. Now, for years, a lot of people in the investing community said you can't trade the news because it's immediately priced in to the market upon release. That's no longer true. Years ago, that was true. It's no longer true because of the thousands of news sources that we have these days. So, for example, if we have an intended reach of 100 people and only 30 of them get the news in the morning, the other 70 people who receive the news that night haven't had an opportunity to react to that yet. And they're reacting to news produced by thousands and thousands of different news sources. And we can take full advantage of that. The only reason that people argued that news was immediately priced in was because of efficient market theory, or EMT. But again, that's no longer true, which we're about to show you. Now, we can start out with the anticipation of news. Now, if you stand at the top of a snowy hill with a small snowball, you roll it down the hill, and as you do, it becomes bigger and bigger. It begins to build momentum. And that very same thing happens with stocks. And if we can spot a potential story ahead of the rest of the herd, we can take a position and wait. We can get a jump start from our tiny little snowball. And then as investors begin to wake up to the opportunity, our snowball, our investment, gets bigger and bigger and gains momentum. Now, typically, we can do this with biotech stocks facing a US FDA decision, a phase 3 trial data release, a PDUFA date, or even an advisory panel committee date that's coming up in, let's say, a month or two. We actually also used anticipation of news with oil, for example. Back on June 4th, Iran rejected the United States' latest nuclear deal. So we took that to mean, well, there's going to be a significant war of words between the U.S. and Israel and Iran because Iran just wasn't coming to the table. Believing that tensions would start to get even worse along the way, we started to inch into oil stocks. What we weren't expecting to see was the bombing in Iran that we saw from Israel and the United States as well, which forced oil prices even higher. As you can see on the screen right now, oil ran from, about 62 to more than 78 a barrel, just on that entire fiasco. And along the way, because as that predictability, we were in beforehand with options on ExxonMobil, Chevron, EOG Resources, things such as that, call options, because we were betting that things were going to kind of spiral out of control. We were not anticipating that short-term war to break out, but that sent oil prices even higher. So we were able to get in on the anticipation of a potential event. And we were able to take wins on XOM, CVX, call options along the way. And then when the tensions died off, you can see, and I'll pinpoint this later, oil finally pulled back from about 78 to 64 a barrel because tensions began to pull back. Now, we didn't trade that pullback in oil because we were anticipating a longer war with Iran. We were not expecting it to start and end so quickly. So we were not in on the short side of the oil trade when oil did pull back substantially from more than 78 to 64 a share. But in anticipation of tensions, we were able to jump in ahead of an explosive situation. We can also look at Generac, which we just opened call options on the other day. Generac, we usually jump into this at least once or twice a year because it is a great hurricane trading opportunity. Ahead of every hurricane season, especially when there's a significant number of forecasts that say there's going to be an X amount of number of hurricanes in the waters. So we can trade that in anticipation of that happening. And as you can see, over at least since 2023, around May of every year, GNRC begins to push even higher because of the argument that power generators will see significant demand, which they typically do. And we began to see that around, you know, uh, late May, early April of this year as well, when Generac ran from about 100 to about 157 a share. However, we're offered another opportunity with Generac Holdings because of the latest heat waves that have enveloped most of the United States over these last few days and few weeks as well. So again, we can make the argument that power generators will see significant demand. So Generac Holdings is definitely one of the hot stocks you want to consider every year, especially call options every year around May. We can also look at the dissemination of news. And again, if you have any questions or comments or anything that's not clear, please note that down and we will get back to you with that at the end of the presentation. Now, with the dissemination of news, millions of us receive our news at different times of the day. And again, with thousands of news sources, we're all exposed to news at different times. So we can think of that news item like tossing a stone in a pond. Throw a stone in, and waves begin to emanate from the center until the waves die off. It's the ripple effect of news. We have our news impact, and then it's dissemination waves, as news goes from local to regional to national to global in some cases. And until that wave dies off, the impact on stocks can be longer lasting and not immediately priced in. And until the news fades off and dies, we can trade its potential impact. Now, it looks like I left off the AMD slide there, but as you can see over the last few days, if you pull up a chart of AMD, it's just been exploding higher because it's raising its cost for one of its GPUs, and it's also heading into earnings as well. So it's beginning to see a significant amount of momentum because a lot of people believe that AMD could produce very strong earnings and a very powerful outlook. So AMD has been very, very explosive. Now, on your screen right now is MicroStrategy. Now, with the dissemination of news, MicroStrategy typically pushes aggressively higher along with Bitcoin prices. So every time Bitcoin gets bullish news or begins to push even aggressively higher, stocks like MicroStrategy will also move significantly higher because MicroStrategy owns millions of Bitcoin. So every time Bitcoin moves higher, MicroStrategy will benefit. And so will Marathon Digital, symbol MARA, and Riot Platform, symbol RIOT, for example, as well. We can also look at Palantir. Palantir has been running aggressively higher on the dissemination of news of artificial intelligence. And you can see this stock has just been skyrocketing since the start of the year from about 65 to a current price of 158.80. We expect Palantir Technologies to push even significantly higher on news that a lot of tech stocks are increasing their AI capex spending. So near term, we would like to see Palantir closer to at least $170, $180 a share near term. Longer term, we'd like to see it closer to 200 a share. And here's that chart of AMD. It was out of sorts. My apologies. You can see that since early April, it ran from about 75 to 166.47. Today, it opened up another $7 higher on news that it's increasing its prices for its GPU, and as we head into earnings and its outlook over the next few days. So you can see AMD has been very explosive, and we expect for AMD to explode even higher, potentially reaching 180, even 190 as we head into earnings over the next few days. So definitely keep an eye on AMD. And then, of course, there's the death of news. Eventually news will die off. And as it does, so do the stocks associated with it. So eventually the ripple effect dies off. So the stocks that went up because of a news item are now coming down because the ripple faded and died. And you can look at COVID stocks like Moderna on your screen right now, for example. It exploded as the severity of COVID news was disseminated. You can see that from 2020 to mid 2021, where it just exploded higher as everyone began to panic. But after the COVID crisis began to fade and die off, the ripple effect died, so did shares of Moderna. And we see situations happen like this literally every day. We can see that after earnings blowups, for example. Now, so for example, Target had bad earnings recently. In late May, the retailer missed earnings and cut guidance. But with a good deal of negativity already priced into the stock afterwards, the pullback became overkill. So we were able to bet on a near-term dead cat bounce, and all we had to do was wait. And we watched it run from about 90 to more than 105 a share, following the news item that brought it down in the first place. Again, the ripple effect died off, creating an opportunity. We can look at Elevance Health, for example. ELV plummeted the other day because it cut guidance. This is a health insurance company. Cut guidance, fell from 340 to less than 280 a share. That was overkill. Also, what led us to this opportunity that we haven't issued yet in Neta just yet. We're just waiting for further confirmation of upside. But you can also see here, technically, it became severely oversold on RSI, on MACD, and on Williams percentage range. RSI, for example, dipped under its 30 line, considered oversold. MACD pulled back significantly from its mean. And Williams percentage range, which typically turns higher and lower before an actual stock does, was severely overextended below its negative 80 line. So all those things combined, plus the death of news, told us there was a potential opportunity here. A few days later, as of this morning, you can see that Elevance Health is just starting to pivot higher. You can see that RSI, MACD, Williams percentage range are also beginning to pivot higher here as well. The news was priced in. The ripple effect of the negativity was fully baked in. Now, with that fully priced in, we can jump into the stock, which is currently at just under 292 a share, and ride its potential rally back higher. Also, what's helping out is the CEO of the company recently bought shares of the stock as well. So that was providing bullish momentum there too. And we're going to talk about AMD again, just real quick. Crises often lead to opportunity as well, and you'll find this after a news event is over. It's another death of news situation. Again, even with explosive growth in AI, AMD and other major tech names plummeted on trade issues and downgrades, and this idea that a lot of the AI boom was already priced into a lot of these stocks. It wasn't. Once AMD hit an extreme low around April, you can see RSI, MACD, Williams percentage range all severely overextended in oversold territory. And we also saw a pickup in institutional interest. We could anticipate a potential reversal and played a few AMD calls as the stock began to rebound higher. So here too, crisis became an opportunity. And we've traded AMD several times with respectable wins along the way. Fueling even more momentum, AMD's CEO lit a fire under the stock, saying the company's AI chips could top NVIDIA chips as well. There's also been a good deal of insider buying with AMD too. So AMD, while it may seem a bit overbought right now, heading into earnings, we could see it appreciate even more. What we may look to do with AMD is we may look to trade a potential sell the news reaction as we get into earnings and its outlook. And then once we trade that sell the news reaction, we can then go long again once AMD bottoms out because the artificial intelligence story is that strong. And with that, I'm going to turn things back over. If you have any questions or comments, please let us know, and we'll stick around and answer anything that you have.
Really, really good stuff, Ian. And it, like I mentioned before, I'm looking at all these names that we have here today. We've got a pretty large group, and I'd say probably half of these people, they're already in one of or two or more of your services. And when you start talking about AMD, I know they're thinking what we're thinking, because I mean, how many times off the top of your head have you done something like AMD? And I'm thinking AMD just because recently, right, where you've gotten into that with a call option. We've closed half of it to secure our some profits, close the second half, but then you re-enter it with a new expiration date, 30 days. I mean, how many times do you do that where you can just double dip or even triple down on these trades?
Oh, many, many times. It all depends on what's happening technically and in the
Yeah,
news cycle.
yeah. And that was going to be my next question for you. How technical do you get, and how important? It blows my mind talking to my parents who are trying to invest their own money. They don't necessarily have the best professionals helping them. And I try to explain to them, if you don't have the technicals, and I'll let you elaborate on that for us, the MACDs, I mean, how important is that in everyday trading?
Well, they're basically dictating what herd mentality is telling us. So if RSI, MACD, Williams percentage range, full and fast stochastics, money flow are all deep in oversold or overbought territory, that's telling you something. That's an indication of what herd mentality has resulted in with this stock.
And what's so amazing is everyone knows that, how important to know the support levels, the buying pressure, all these indicators, all these technicals. Everyone knows. I mean, we talk to clients, you know this, while you're busy in the office with your door closed doing what you do. We're on the phones with people, and I'm just going to say this, it's scary that even though we know how important those technicals are, and that you have to have them. I mean, you must have these technicals. People still don't use them, and they wonder why they lose money every year. And we talk to thousands and thousands and thousands of people, and they are not using these technicals. And it's important that everyone here understands. We hope that you make the smart decision and hire basically a professional, an expert like Ian with us today, and have him in your corner for that support, not just the tens of thousands of dollars of income that you could see, but the support to know that the trades you're taking, the trades you're following, these signals, there is a tremendous amount of weight and value and research and time spent on these trades. And obviously Ian's expertise, we're just giving you guys a glimpse today. We don't want to bore you and sit here for an hour or 2 hours repeating ourselves. You must understand the value of the time and the resources that are behind these trades. And, Ian, I know a lot of people, for example, when you're doing these trades, I know the answer, but they're always going to be a put or they're always going to be a call in this service, right?
Right.
No spreads, no covered calls, no individual stock purchases.
No, the simpler the better.
Yeah, okay. All right, and we do have some questions that are popping in here. I'm going to wait. I'm going to go a little off track here because as you were talking about AMD, as you were talking about PLTR, I'm getting all these visuals of my actual trading account where I took those trades with you. But I'm looking here at the news event trade alert service, and I'm just looking at the last 8 trades that we've closed. We've had one loser. And interesting enough, it was on Apple, which I feel like you've been batting 1,000 on Apple. Obviously not.
Yeah.
We did close for a loss on Apple. PLTR July 18, 2020, 148 calls, winner. You did PLTR again, 142 calls, And actually, you did the 142 before the 148. Excuse me. I'm working, most recent to backwards kind of here.
Yeah.
And how often would you say you close half a position and let the other half go another day or two?
Oh, we tend to do that a lot. Just we want to protect the win, but we also want to see if there's further momentum that we're watching. We don't want to, risk the full position. We just want to protect something along the way, just in
I like
case.
that.
But
Yeah,
there's
I like that.
further.
And that PLTR that you did twice, actually, let's see, the July 18th 142 call, the July 18th 148 call, and that was, of course, done in June, mid-June, mid-July. Oh, no, I'm sorry. You actually did close that in July. But yeah, so the last 8 trades here in the last couple months, because we average, what would you say, 1, sometimes 2 trades a week?
Well, we'd like to issue more. We'd like to do at least 5 or 6 trades a week. But lately, because of the volatility in the markets, even though markets are hitting new highs recently, there's still a considerable amount of volatility and a lot of different things impacting everything negatively and positively. It's been a bit wild lately.
And I know it's a silly question. So you're not just putting trades out just for the sake of putting trades out. You're actually kind of going into more of a defensive, only 1, maybe 2 right now, but have the ability of ramping it up once things get more stable.
Right, right, right. Yeah, we never want to rush any trades because if you rush a trade just for the sake of issuing a trade, you're going to lose money, and that's not
Yeah,
what we want to do.
yeah, I could not agree more. So, and a lot of our clients, they kind of lose sight of that, and I'm guilty of it too. Hey, Ian, you're doing 1 or 2 trades a week. We're knocking it out of the park. Why not do more? We that little part of our brain, the greed part, right? We want more, more, more. It's never good enough. But that's good to know that you're conscious of that. I'm going to take over the screen here. If you want to unshare or stop sharing, so I can take over. Thank you. We are going to be wrapping this up very shortly here. As I told you all earlier, calling us is the best way. A lot of our clients, we have appointments scheduled today and tomorrow. We are going to be talking about what program they have, what program they don't have, what their returns are, how we can get it higher. But for those who are not in, this is simple. We keep this as easy as possible. Ian, no offense, Ian, but he has the hard job, right? He's got to spend 6, 7, 8, 9, 10 hours a day doing what he does, doing the research, running those technicals that we talked about all day, every day. Okay. Our clients, the way that Market Services has built this and designed this since 2008, our clients have it the easiest. When Ian makes a decision that he wants to act, because he's got half a dozen different technicals, he's got another half a dozen different avenues and resources that he goes to verify, to check. And when all of these things match and give him the green light, and of course, let's not forget his own personal expertise. When all of those things match, and it's money time, it's go time, 3 things happen. You're going to get a text message to your cell phone. You're going to get an email to your computer, to your email. And you're going to get a one-on-one phone call from Ian's team, our staff. Now, of course, in the beginning, right, that phone call, hey, we want to make sure you got the text message. We want to make sure you got the email. We have to establish crystal clear communication. We need to make sure that you're seeing the trade details. Make sure that you're seeing the buy to open, the strike price, the expiration date. We have to make sure that you're getting that information. Now, of course, we will walk you through that trade if you need help. If you're new at this, no problem. We will walk you through that trade. We will show you how to get out of the stock area and into the options. We will show you what the drop-down box looks like. Doesn't matter, Charles Schwab or whatever, it doesn't matter who you're using. Most of our clients, they have experience. They know how to place a trade. It takes 3 minutes, 4 minutes. Very, very simple to follow. Text message, email, and a phone call. And, and obviously after a month or two, some of our clients say, hey, you don't need to call me. I get the text. I go into my trading account. I copy it. I wait for Ian to send me the text of when to get out, and that's that. Our clients are pretty evenly split, 50-50. Half of our clients, and I'm serious when I say this, they don't care how it works. They only care that it does work. They don't want us calling. We have guys at the Pentagon. We have guys that work for it. We have people very, very high up that are getting these trade services, and they don't have time to talk. They literally don't have time to talk to us. Then you have the other half of our clients. They want to pull that 1967. They want to pull that car into the garage. They want to pop the hood. They want to trade talk, and we love that. We love that. If you couldn't tell, actually, Ian is a little under the weather today, and yet you can still hear the passion in his voice. And I hope you can hear it in mine. We love what we do. This is us. Every day, we enjoy coming to work, working with our clients, putting them in programs that generate cash flow week in, week out. Are there going to be losing trades? Of course. Anybody who tells you that there's not losing trades is not being honest with you. Of course we have losing trades. Luckily, fortunately, we have an overwhelming amount of more winners than losers, which makes it a lot of fun. Okay. Any questions you have? Let's see. We got a couple now. You want to do the Q&A now, Ian?
Sure.
Yeah, let's get this. I'm going to leave this up for you guys. If you want to scan this, you can schedule an appointment. If you want to call, we have our staff right now available. You might even hear the phone ring in the background. They are available to help you as we speak, and that's our phone number there, 310-647-5664. You will get Brad. You will get Edward. You'll get Sylvester. You'll get Lewis. You'll get Scott. These guys have over 50 years of experience, and they've actually been with us since day one, 2019, with Ian Cooper. The recording, yes. Muhammad Yosef, I know who you are, sir. Good to see you. You're one of our clients for many, many years. Yes, the recording will be sent to all of your emails probably today or tomorrow. Great news, I ran late. Chris, that's okay. We get it. Yes, there will be a replay sent. Okay, some of these questions, I kind of jumped the gun earlier on spreads, covered calls, and stocks. No, we do not do any stock purchases. We're not doing any covered calls. That requires a lot more money. You have to purchase 100 shares. Anyways, no, we do not. This is standard puts and calls. Holding period, that's a good question. Ian, what would you say is the average holding period?
About a week to a week and a half at the very most. We've had some trades close out, and we had one trade earlier this week. The trade closed out in about a day or two.
Yeah, it seems like when the market's volatile and you're using all of those technicals where you're able to catch those price movements, which the staff here, we continuously talk about, your timing is spot on. That's usually when we're out in a day or two. I remember PLTR back in February or March. I don't know if you remember that trade, but where you did 7x, 6x. I think we paid $4 a contract and you got out for like $21 or whatever it was.
Oh yeah.
But when things move quick, right? You're able to capitalize on those profits in a day or two or three. When things are a little bit slower, then you're talking about 5 or 10 days typically, is what I've seen.
Yes.
The trade selection process, how would you answer that? I mean, Cliff Note version, what's kind of your method?
I'm sorry, I missed that question.
The trade selection process. I mean, I know we talked about you scanning all your technicals. You're kind of looking through you're just kind of going through your motions, right?
Typically, yeah. I mean, I'll give you one of the cheats that I use. If I'm looking for a death of news situation, you can pull up, Yahoo Finance most active and see, which stocks ran up the most or fell the most on a particular day, and you can go from there with the death of news. And if you're going to buy a call or a put, you just pull up that. If a stock, for example, ran up $20, you want to see why that happened, and then you want to pull up a technical chart and see. Is there an opportunity on the short side or is there further momentum? here. I also like to pay very close attention to popular news trends. President Trump recently put out a new artificial intelligence action plan, which had a significantly positive impact on a lot of the AI stocks as well. We've also been looking at a lot of the Magnificent Seven stocks. They've all been exploding higher as they head into earnings because there's been a lot of excitement. And there's been even more excitement because a lot of the companies are announcing higher spending when it comes to AI capex these last few days.
Yeah, that's just something that's a never-ending story. News, right? There's always something going on in whatever sector of the market. Mark Zuckerberg, for example, I was reading yesterday, has spent billions and billions of dollars building the world's most elite super intelligent team. These are people these are people that we've never heard of. But what's so interesting about it, the founder of Scale AI, Alexander Wang, the co-creator, I should say, of ChatGPT, Zhai Zhao, all these people that I've never even heard of. Where's that money? Mark Zuckerberg is putting $61 billion just in 2025, just this year. $65 billion. Where's that money going? What stocks are going to be affected by it? What companies? What equities? And it's just so fascinating how there's President Donald Trump reaching a deal with the EU. They're going to now have to buy. Part of the deal was $750 billion in U.S. energy, and they're actually going to invest $600 billion more on top than what they had agreed to before. I mean, it's a huge deal. Whether it doesn't matter where you are politically. This type of information, and I know, Ian, we've talked about this, behind closed doors and in other meetings. There is right now, in my opinion, with AI, with all these shifts going, it's never ending. But the amount of money that can be made in the options market, knowing, not rocket science here. I mean, we're just looking at those technicals, paying attention to what's going on, using your resources. I mean, are you seeing a record-breaking type year for you personally, and of course our members who are in these services? Are you foaming at the mouth with all this stuff that's going on?
Yeah, there's significant opportunities, especially with all these the trade war issues. We just had that deal with the U.S. And the EU. Aside from energy, there's also a significant boost from the EU. They're going to be spending billions of dollars on U.S. military as well. And the next big news event coming up is, could we see a trade deal ahead of the August 1st deadline? If we can, markets could be higher.
And I would bet, and I haven't asked you this before, but I would bet that you personally have a little basket or sheet or whatever folder or computer screen of about 20, 30 of these companies that you're monitoring that you feel strongly about. I mean, the opportunities that we're talking about here, I mean, you've got them in front of you. It's just a matter of time when you're going to act on them.
Right. Yeah, you always create a list of the hot stocks and the hot topics and the hot themes that are coming up so that you know exactly, what to look at and when to act on it.
Yeah, that's exciting stuff. I will be there. I can guarantee you the clients with us today that are already in one or two or three of your programs, they will be there waiting for that trade. And I believe we've got a couple coming out this week, or one, or I know you mentioned you have several on the desk that you're waiting to act on. Could be today. I don't want you to put your foot in your mouth, but we're waiting and we're excited for that. And we've covered a lot today. I want to thank you, Ian, for your time, your attention. You continue to amaze us here at the office. We appreciate that. Ladies and gentlemen, you've seen the numbers. You've heard the strategy. Now it's your move. Yes, please check your email. There will be a replay sent out, but more importantly, to get these trades, to get these types of returns, not yesterday, not in a month, not in a year, now, to be a part of a successful strategy, not hypothetical back tested stuff that maybe if we did this, we could have seen. No, actual alerts sent to our clients since 2019. This year alone, roughly 90% has been, almost doubling accounts already this year across Ian's strategies. This is happening as we speak. If this is something you want to be a part of, our phone number's on the screen. If you have questions about how it works, call us. We will walk you through it. We will show you and talk to you about everything that Ian has planned. We are passionate about helping people. We are passionate about putting people in the most profitable strategy we have with the most profitable person, I think, anywhere. I ask clients all the time, show me something that's better, and they can't, Ian. So thank you, Ian, so much for being here. Thank you all for being here. That concludes our webinar today. We will be doing another one coming up very soon. We'll send those invites out probably in the next 2 or 3 weeks. But until then, happy trading, and we look forward to talking to you very soon. Again, Ian, thank you for your time.
No problem.